There's going to be a lot to take in, factor in terms of prices, the way things have already been positioned as far as this week's concerned. Very, very crucial week, even as we move into that big event next week. But that said, when it comes to markets, at the moment we're talking about the Nifty. It was a flattish Friday, but what we did see was an increase of around 5% in open interest towards what does look like at the moment longs, considering the change in shift in sentiment as far as the markets are concerned. Now, what we did see, in fact, the Nifty is edged higher. It has also tested the mark of 23,000, and the entire range has now shifted higher. I'm going to talk about that range in just a bit, but the Nifty futures, of course, looking at a 5% increase. The Bank Nifty looking at unwinding, and in fact, the futures there are looking at a decline of around 2.5% in terms of its open interest, even as the underlying advances by around 0.4%. So there is a little bit of positivity building in, but it is going to remain a choppy week because of so many events lined up. And even in the run into the big outcome of the general elections early next week is something that we need to factor in. Now, at the moment, as far as Friday is concerned, we saw a lot of writing around both calls and puts. What we are keeping an eye on, keeping in mind the 30th May expiry in terms of your overall open interest distribution picture is, 23,000. That's where we've seen the most amount of writing in terms of calls and puts, a lot of straddles written there as well. But on the lower end, keeping an eye on 22,500, that's where you have a substantial amount of puts being added. And of course, on the higher end, all the way to 23,500, that's where you see a substantial amount of calls being added. And that strike. It's a 1,000-odd point range, but I reckon that the pivot or the center point now moves back at around 23,000, as indicated by the kind of writing that you've seen both in calls and puts. Moving on to the 6th of June, that expiry. Again, it is essentially the 23,000 calls inputs where there's a substantial amount of both of these strikes written. But and on the lower end and on the higher end, it isn't very different from what you do observe as far as the 30th May expiry is concerned. Moving on to stocks, a lot of more stocks coming through on account of earnings. We're seeing some amount of reactions. So shorts for something like an Interglobe Aviation, Apollo Hospitals, Atul, Coromandel, next see longs, and in terms of stocks which are seeing unwinding, again a lot of short covering for Vodafone Idea, Biocon, and HDFC Bank. So we continue to keep an eye on these counters. But moving in, how are we looking at trade as far as these markets are concerned? Well, we have Ajit Rambiar of Ajira Ventures who's joining us on the show. Ajit, good morning. Thank you so much for joining in. A quick brief on your view on the markets, on benchmarks essentially. Ajit, how are you trading them?
Yeah, good morning, Adam. Thanks for being on the show. So we have entered the parliament election result phase. The overall trend remains bullish with major indices making lifetime highs. So with the India VIX hitting 21-22 levels, we can expect the market to behave in a volatile fashion. The exit polls, which will start from 1st June, will play a significant role in the market movements. We will strongly advise traders to refrain from deploying strategies that earn from theta decay. Rather, one should be gamma long in this kind of markets to enjoy possible big movements. So in Nifty, we have a support at around 20,800 levels. And in Bank Nifty, we have a support at 48,700 levels. So it is a free zone for both the indices once they sustain above these support levels.
Right. So, you do know about the supports now. That's Ajit's view. But Ajit, let's talk about AB Capital. I believe you have an options structure strategy there.
Yeah, so we are bullish on this counter. Yesterday, Aditya Birla Group also crossed the 100 billion market cap milestone. So we initiate a bull call spread where we buy 1 May 230 call at 4 rupees 60 paise and sell 1 May 245 call at rupees 1. So the duration of this strategy is up to May expiry and our target is 245. So near 3 rupees 60 paise is the cost of the strategy.
Okay. The other interesting one, Ajit, on your radar is Exide, which has shown a lot of strength. It was, in fact, also advanced it was also advancing by around 2% last Friday. What's the view on Exide here?
So Exide is a trending counter. We have a bullish strategy in Exide where we buy 1 May future. Future is involved in the strategy. So we buy May future at 477.50. Sell 1 May 500 call at rupees 3. 500 is our target price. And buy 1 May 450 put at ₹3. So we safeguard ourselves by buying a put of 450.
All right. Okay. Okay. And so that's as far as Exide is concerned. Overall, on a general basis, of course, the idea is to play a positive trend on Exide too. We also have a handful of broking notes which are or rather maintain a buy on Exide. The valuations, however, at the moment are something that's going to be concerning. But Ajit, on that note, going to take a moment to thank you for joining us and taking us through your views on the markets and also giving us a handful of trading ideas. With that, it's back to you all.
Thanks for that, Agam.